Hello and good day. Alex Cole, my friend, on this fine September 8th, 2022. How are you?
I'm okay. A little saddened by the news of the Queen passing just moments ago.
Moments ago.
But let's look at the markets.
Absolutely. Queen's not going to be able to help us out with our trading accounts. So, diving right into the GoNoGo cross asset heat map, talk to us about what you're seeing in terms of just the trend of large asset classes around the world.
Yeah, not too much has changed this week. We're looking at a no-go still in equities. We've got a bit of a stronger day working today and yesterday, but still a no-go in the US domestic markets, a strong no-go in Treasury bond prices. Commodities, they didn't hold on to that go trend particularly long and have now rolled over into a no-go as well. And there goes the dollar on the bottom panel. Not much to say that hasn't already been said there.
Absolutely. Very heavy weightings in the market. Let's dive into the S&P 500 and take a look at that price action of the US domestic index, just to see what's going on a little bit closer to home. Let's start with a daily chart, and then we'll back out to a longer time frame.
Here's the daily. We can see that this go trend, it got to new highs in an intermediate basis, but then it fell away quite quickly. We had that strong move lower last week. We can see that this week we've tried to rally a little bit, but we're still in a no-go, painting a pink bar, which is obviously the weaker form of the no-go trend. But we've had a lot of heavy volume on the beginning of this no-go. You can see how the oscillator is dark blue as prices have moved lower. And now we're seeing the oscillator not oversold, but in negative territory on heavy volume.
Yeah, I was just talking with some friends over at Sentiment Trader. The put call ratio, commercial hedgers having a net bearish position that's pretty extreme, things that we didn't even see in 2008. So certainly investors a little spooked by the recent rollover. From a trend perspective, we know that we are in a no-go trend until proven otherwise. And seeing that negative momentum confirmed on heavy volume certainly adds to the weight of the evidence to the downside. Alex,
Yeah.
as always, let's step out to a longer time frame. Let's take a look at the weekly chart of the S&P 500 just to see where we've been at on a little longer term.
Yeah, this one's interesting because we noticed at the end of last week that this return to strength in the no-go with this purple bar had also coincided with a return to the zero line on the oscillator. So an inflection point remains. You can see that we're really generally making lower highs and lower lows, even after the strength of the weeks didn't get us out of the no-go. We've now rolled back over into the stronger purple bars. And the oscillator, although it dipped into positive territory, is back testing the zero line. So that's going to be very important. If the oscillator now finds support at zero, then we may well look for a higher low and price to rally. But if the oscillator breaks back below zero, then we're well and truly in the no-go trend. So we're going to watch the zero line here and see which way it goes.
Absolutely. Let's talk a little bit about the macro forces that are affecting equities around the world. Let's take a look at the TNX, the 10-year yield. You mentioned in that cross-asset heat map, we've seen a lot of selling in the bond market, obviously moving inverse to rates or yields. So we're seeing that continue to rally here on the daily basis. What jumps off the chart to you here, Alex?
Yeah, and we can throw this back to our long quarterly chart because this trend line is on the quarterly chart. So forgive us if it looks a little messy. We wouldn't typically draw this line on the daily, but it's being carried over from the quarterly. So maybe we'll start with the quarterly and then we'll go down to the daily because it'll make a little bit more sense that way with this line on here. So this is our downward sloping multi-decade long trend line. And what we've been talking about over really the past year is this rising rate environment, the climbing rates, which really took us back to resistance at the downward sloping trend line. And then we noted that we had a change in color, an amber go fish bar. And then last quarter, we closed above the trend line with our first go bar on a quarterly basis. And you can see that we're now trading above that with the bar that's forming for this quarter and the oscillators in positive territory. If we step that all the way down then to a daily chart, we can remove the trend line and clean it up a little bit. And you can just see that rising rate environment that cooled off over the last couple of months has returned. And we're now in a go trend again, a strong go trend, bright blue bars uninterrupted succession of blue bars here as the oscillator stays positive and we come back to test the highs from June. So we're in a go trend. We're looking to test those highs and potentially break above them. And we've got momentum on the side of the go trend.
Absolutely. And just for those who are new to GoNoGo charts, talk to us a little bit about the red triangles that are indicating the overbought conditions. How does that interplay work between trend and momentum, between the GoNoGo trend price panel and the GoNoGo oscillator in our lower panel?
Yeah, let me zoom in just a little bit here and you can see what we're talking about. When we see momentum swing particularly fast in any direction, we get what we call counter trend arrows. So what we're looking at here is that we've got a go trend in place. The oscillator has risen to overbought levels and has come back below 5. Our oscillator goes from -6 to +6. So when we cross back below 5, we're going to throw these counter trend correction arrows on the chart just to indicate that perhaps in the short term, we may struggle to go higher because we might correct against the trend because of the speed in which we went into overbought territory. When in a strong go trend, though, we want to make sure we take that into context and understand that very strong momentum can sometimes be a very good thing for a go trend. So that's what those triangles mean. When we see the circles, those are our other icon, which says that we are getting momentum returning in the direction of the trend. So in this case, you can see the no-go was in place during the correction. And then when the oscillator moves back below the zero line into negative territory, we got a continuation circle, meaning that price was likely to continue in that direction as it did for a week to 10 days or so.
Absolutely, and as Alex and I are firm believers in technical analysis and practitioners of the discipline, the way that we've been taught how to use momentum oscillators, really, the traditional sense, looking for overbought and oversold areas as a potential place for mean reversion, at least in the short run. So those counter trend correction arrows that we're seeing on the right side of the chart simply say that we got to oversold conditions and then departed from those extremes.
Overbought conditions. Yeah.
Excuse me, overbought conditions and then departed from those extremes. So it's not an immediate sell signal, but it does indicate some exhaustion, at least in the immediate term, for that trend. So Alex, let's move on from our interest rate environment. Let's check in on the U.S. dollar, which, I mean, it's like Rocky 7. This guy just never gets knocked down, right?
It gets if it does, it gets right back up. It's not about how many times you get knocked down, but how many times you get back up, right? And
I think Chumbawamba said it best, didn't they?
Yeah, do you want to sing that for everybody?
I think our StockCharts viewers would prefer that I don't.
I think I'd prefer that you don't too. But yeah, the dollar keeps going from strength to strength, and we talked about this resistance level here where there was some overhead supply that was in line with this prior high. We got above that last week, and now we're consolidating above those levels. But strong blue bars, we do see, as we just explained, one of these counter trend correction arrows because the oscillator that was overbought has cooled off. So we could expect perhaps a pause at these levels, but yes, not a change in trend. Just a counter trend correction arrow, but a very strong looking dollar chart, still new highs.
Absolutely. And holding with the logic that as institutional investors see weakness in their equity positions, raising capital, raising cash in the account makes a lot of sense from a defensive perspective. We're going to get to the sector RelMap of the S&P 500 in just a moment, but let's check in on oil as the third and final of our macro forces that we've been keeping an eye on all year long here at the GoNoGo show.
Yeah, oil's been struggling. Oil made a new low yesterday. It's come off the floor a little bit today, but a new low in oil prices. And you can see just for the crosshairs that are on the chart here, how much support there was or should have been at that level. You can see how many times going back all the way to March and April, this level acted as support and we dropped below that. And now we're at the secondary level of support from the lows there that were in late March, early April. So a significant drop out of this range into this new lower range We are seeing a counter trend correction arrow now for the NoGo. So that's a green arrow suggesting that price has moved very quickly in this direction, as you can see, which caused the oscillator to go oversold. We've now come off those oversold levels, and so we may struggle to go lower in the near term, but a strongly bearish chart for oil.
Absolutely. And just to rewind to this show last week, we were at the inflection point at the zero line and talking about risk management using GoNoGo charts, where we were at the inflection point. Oscillator was at the zero line, telling us we had neutral momentum and what looked to be a pretty clear range-bound channel that oil was trading within. So all else being equal, right? We could role play what two possible scenarios would look like. Find support, and we rally back to the top of that channel. And if we don't find support, as we were highlighting last week, when we see the GoNoGo oscillator break below the zero line, that's our first indication that that the trend is continuing to the downside with further losses. So just to kind of back up and think about where we were at last week, and now what we have seen in confirmation to the downside, breaking through that important area of support. Alex, let's shift gears and take a look at the GoNoGo Sector RelMap. We obviously care very much about what's happening at the index level, but we need to get under the hood to understand where leadership and laggards exist. We're using a simple ratio of each sector against the benchmark index. So the sector divided by the index to give us a sense of the trend on a relative strength perspective. Not necessarily the absolute trend. And so we're going to go through a couple of these sectors and take a look at the individual charts as well. But Alex, why don't you walk us through the GoNoGo Sector RelMap real quick?
Yeah, the real standout over the last couple of weeks is how technology has rolled over. That's the top panel here. We've got our growth sectors up the top: technology, discretionary, communications. Communications really never entered the Go trend, just a bar or two here. But technology and discretionary seem to be leading a rotation back towards the growth sectors. Communications never really took part in that. And now we can see that technology has really rolled over, painting strong no-go bars that's really helped drag the index lower. What we're looking at then is a bit more of a defensive market map than perhaps we had a few weeks ago, where we've only got discretionary hanging on to a relative outperformance. But the other sectors that are leading here are more value sectors. We've got energy, financials, industrials, and utilities in a strong go trend on a relative basis.
Absolutely. So let's dive in and take a look at the XLE. Obviously, we saw oil prices continuing to decline, but on a relative basis, the energy sector of the S&P 500 is holding on to the relative strength against the index here in this downward trending market. Talk to us a little bit from a trend perspective on what you're seeing in the XLE.
So in the XLE, what we're seeing is that prices have cooled off and corrected, but what they haven't done is rolled over yet into a no-go trend. And we were talking about even last week, at the end of the week and into the beginning of the week, when we put out the flight path, that we were at the zero line and we were going to look to see if the sector could hold support here. What we're seeing is heavy volume going back all the way to these stronger go bars, heavy volume continuing as we correct, and this GoNoGo squeeze building towards its max, which means that we've been stuck at the zero line, momentum non-directional for several bars. We're going to look to see if we find support here, or if the zero line is unable to provide support, perhaps the oscillator will break into negative territory.
Absolutely. So here we are at that same inflection point. We're at an area of support, and we're seeing that that tug of war between buyers and sellers. So the GoNoGo squeeze is a way to visualize what's actually happening in the market. Remember, high volume. We have a lot of trading happening here, but we don't have control from either the bulls or the bears in terms of a directional trend for the XLE. The Go trend is still in place on weak bars, but we see at this inflection point that the GoNoGo oscillator is typically our leading indicator. And from a volatility compression, we know that we can see high velocity moves in price in the direction of the break. So all else being equal, we're in a Go trend, we're at zero. We would expect to find support for momentum at the zero line if this Go trend is healthy. So a break below zero means that we have a direct threat to the absolute trend in the XLE. and certainly negative momentum often precedes further price losses. So, Alex, let's take a look at the XLE just on a relative basis to the SPY. So the same chart, here's our absolute trend. Let's take a look at this on a relative basis to the S&P 500.
So this is the ratio itself. Looks fairly similar, but you can see how on a relative strength basis, we're still in a go trend and price is above the levels of support here that came from the resistance in this correction or this consolidation period. So we're above these levels. If we are able to find support here, this would set a higher low. We're still in a go trend, but testing the zero line on the oscillator again.
Absolutely. Let's do the same exercise with the utility sector. Now we know that defense has been on the field as rates regained their upward trend. If we're taking a look at the utility sector of the S&P 500, some pretty fascinating interplay between GoNoGo oscillator and the price panel. Talk to us a little bit about what you're seeing.
Yeah, absolutely. So this is a different looking chart. You can see how we've recently made highs here that are higher than the highs from back in April. Completely different from what we were seeing with the market as a whole and technology. Now we've corrected against the trend, as has the market over the last couple of weeks, even enough in this case to push the oscillator below the zero line on heavy volume. But we've quickly come back to zero and we're in stronger go bars again on the GoNoGo trend as we approach these highs. So you've got, like you said, it's an interesting interplay here where the oscillator went below the zero line and came back, but the trend seems to be more in place or stronger than that of the technology sector.
Absolutely. All right. Those are our bull cases for today. Let's take a look at what the bears are doing to pull this market down. Let's pull up the XLK and just take a look at the information technology sector on an absolute trend basis.
Yeah, so here's the chart of the XLK. You can see that it looks quite a lot like the S&P. Remember, the S&P is dominated by mega cap stocks, mostly tech stocks these days. But you can see how that rollover into the NoGo has been fairly sharp, and you can see a succession of strong purple NoGo bars here as we move lower. You can see, as you mentioned earlier, the oscillator should be a leading indicator of what's going to happen with price because momentum leads price action. And you can see how when it hit the zero line here in a go trend, we would have been looking for support that didn't happen. And as it broke below the zero line, that told us that there was trouble ahead. And then we fell into the amber go fish bars and then a strong no-go. So we're in a strong no-go now. Oscillators in negative territory, heavy volume. We're not looking too good on technology.
Absolutely. So for many of our clients and certainly for you viewers on StockCharts TV, I know playing to the short side is part of your discipline as well. So let's take a look at an individual security within the XLK. Let's pull up a chart of Apple and talk about how we can use GoNoGo charts to the short side to help us lean into those downward trends.
Yeah, so Apple, if you remember from weeks and months past, was outperforming quite strongly the market, and Apple hadn't suffered quite as much, especially during the first part of the year. But you see how it's got a similar shape, even though it rallied higher, it rallied further than the market and technology right back up to these prior highs. There's some traditional technical analysis for you right there. That's resistance at those levels, and you can see how price quickly fell away after the counter trend correction arrow. You should be getting the idea now of how to read these charts. We come down to the oscillator, testing the zero line. We'll be looking for support here in the go trend. When it doesn't happen, and then you get heavy volume as the oscillator moves into negative territory, that leads the trend change in price above. So given that technology is underperforming, you've got the S&P in a no-go. Apple has entered this no-go trend. We actually pulled this one out because Monday's bar was Monday was showing this fresh no-go in Apple. So Apple finally giving up on its outperformance and entering the no-go trend like the technology sector and the S&P. So you could take this now, a few ways. You could go down in time frame. You could look for entries on a lower time frame chart. If the short side is something that you're interested in, then you can see how this tech giant entered the no-go fairly late. And so perhaps we'll play catch up. We'll have to see. But you could certainly use this to then talk about getting involved in the no-go in technology.
Absolutely. And for trend following investors, we know that small losses are just fine. We want to look for those very outsized gains to help improve the overall portfolio performance. So when we look at Apple in the May and June timeframe, we see that we're in a no-go trend. We come up to test the zero line several times, but continue to be rejected as that trend continues to the downside. I think the power for me of looking at the GoNoGo oscillator is to see where we get to that level of neutrality from momentum and it continues in the direction of the trend. We know that those are buyable dips on the upside, and then areas to maybe concentrate our short positions or really lean into that area of the market as the trend continues lower. So certainly we haven't seen trend continuation yet in this new no-go trend for Apple, but we know that these charts can be used to capture trends in both directions.
And that's exactly the point, Tyler, because if you're looking for a way to enter this, you may not see that yet. You might be looking for that trend continuation red circle, but you could step down a time frame and look for something on a 2-hour chart or a 4-hour chart, because you're going to get that signal a little quicker if you're looking to partake in the no-go.
Absolutely. So from within our growth sectors, we understand the XLK was pulling us up through the rally this earlier this summer, and then pulling us down in the most recent collapse. Let's take a look at the consumer discretionary sector. A couple of names within that have really held up well. Let's pull up a chart of McDonald's, because if there is one thing we love about excuse me, Jimmy Buffett, not Warren Buffett.
Warren Buffett.
It's 5 o'clock somewhere, meaning there is a trend somewhere. And so if you need to have equity exposure, if you're not 100% in cash, we got to look for these relative outperformers and capture those trends. So Alex, talk to us about what you're seeing in terms of McDonald's.
Yeah, McDonald's is obviously, one of the more defensive stocks. Very, fairly cheap price food is probably not going to be the first thing people stop doing, is going to McDonald's when times get tight. And you can see how McDonald's has held up much better than the market itself. It's made new highs in this period. And even this recent correction, we see it rally enough to go back to amber goldfish bars, and now the oscillator testing zero from below. So if we can get above zero here and we can see new go trends emerge, we might be looking for new highs on something like McDonald's.
Absolutely. And then let's turn our eye to Tesla as we come to the end of today's show. Another important holding within the consumer discretionary sector. What are you seeing here from a trend perspective, Alex?
Yeah, I mean, Tesla, this looks bullish. You've got the markets doing what they're doing, but you can see a series of higher highs and higher lows here on Tesla. And this recent correction, you see it making a higher low. We only had one no-go bar back to amber bars, oscillator back to test the zero from below. So I'm not saying by any stretch of the imagination that this looks like a strong setup in the up direction, but we aren't looking as bearish as the rest of the market. And we'd wait to see for a couple of things. We'd like to see the oscillator above zero, and then we'd like to see a go bar emerge. But you can see how this looks like it could potentially be a higher low in Tesla.
Absolutely. Thank you, as always, Alex, for walking us through the markets. And always a pleasure to talk GoNoGo charts with you. For all of our viewers on StockCharts, if you're on YouTube, that's great. Make sure you also download StockChartsTV.com, the on-demand app, so you can carry this show and many others with you wherever you go. And Alex, my condolences to you and the Queen.
Indeed.
We'll see you again next time. Thanks, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.